Hello, my name is Joelle Wimet, and for my real-world annual report project, I had Bed Bath & Beyond as the company. So, some background information on Bed Bath & Beyond is that it's an American retail chain of home merchandise. What do they sell? They sell kitchen necessities, bedroom sets, outdoor furniture, and other basic housewares in that vicinity. Bed Bath & Beyond's stock price is a little over $19 million, and in the upcoming year of 2022, multiple Bed Bath & Beyond stores will be liquidated, and they plan to close around 200 locations in total, but for now it's only around 43 stores by February. Why are they closing these stores? So they're closing the stores because they're focusing on remodeling the more profitable stores and switching to a more digital atmosphere for a majority of the company. Okay, so moving to the first slide, we're going to be focusing on Bed Bath & Beyond's assets and liabilities. So in 2021, assets were almost at $6.5 million, and this was about $1.3 million less than the previous year. This might be because the previous year assets held for sale was listed, and this year it was not. Moving over to liabilities, liabilities for 2021 were around $5 million. They decreased from the previous year by $848,000. Is this good or bad? So having more assets than liabilities is good overall, although assets did decline from 2020 to 2021. But having more assets and liabilities is always a good thing. For this slide, we will be looking at gross profit and sales. Overall, gross profit and sales have been on the decline since 2019. They haven't been doing too good. In 2019, sales were around 8 mil, and in 2021, it decreased to around 6 mil. Gross profit for 2019 was around 4 million, and in 2021, it declined to 3 million. So overall, gross profit did drop around 1 million, while the cost of sales almost reached a $2 million decline. So what could have caused this decline? Well, I think what caused this decline was definitely the COVID-19 pandemic. Less people shopping, less sales, it's an overall thing. A lot of other companies experience the same issue. So because that happened, this is most likely why these numbers were decreasing. Okay, and next up we are focusing on merchandise inventories and long-term debt. Merchandise inventories for 2020 were around 2 million, and they decreased to around 1.6 million in 2021. Is this good or bad? So this is good overall, because if merchandise inventory had increased, that means more goods are purchased than sold, so keeping it down means they're selling merchandise at a good rate. For long-term debt, it decreased from 1.4 million in 2020 to 1.1 million in 2021. This is overall good. Keeping the debt at a low rate is always best for a company. So the last slide, I decided to focus on accounts payable and accounts receivable. Starting with accounts payable, it increased for Bed Bath & Beyond by 41,000 from 2020 to 2021. In 2021, accounts payable had a balance of 98,000. So does this show improvement? Yes, it does, because it shows that the company is paying its creditors at a fast rate, which means that they're efficiently paying their bills, and this is a really good rep for a company as well. Next up and lastly, we have accounts receivable. Bed Bath & Beyond actually does not list their accounts receivable on the financial statements. Why is this? It's because usually companies that specialize in retail don't have an accounts receivable, because payments are made up front right at the registers. So accounts receivable was not listed. And this is my source page, so this wraps up my presentation. I hope you learned a little bit more about the company and about Bed Bath & Beyond today, as I did throughout this whole research process. Thank you again.